You're watching today's video technical update presented by FX Times. It is Tuesday, August 31st, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex markets. I'll be using VT Trader, so please download this trading platform to follow along. The euro dollar had a sharp correction rally in the European session, but this move did not invalidate the bearish swing outlook just yet. You can also see the euro pair losses against the yen, but the Japanese currency remains firm in the US session. The US dollar Japanese yen pair continues to decline, and the Swiss franc dominated the European session as the euro Swiss franc pair is at an all-time low, and the dollar Swiss is at a 7-month low. The Swiss franc also is threatening to outperform the Japanese yen pair as a safe haven currency. This video is being produced at about 1 p.m. Eastern Time during the US trading session. There is an earlier update on the euro dollar, looking at the 1 hour time frame as the market tested this 1.2740 area, which is this right above the 61.8% retracement level. So the market seems to be rejecting this correction rally there, and if it holds up there, that's a good sign for the bearish outlook, because this was not a good sign. This strong rally here was relatively much stronger than these candles here. Took much shorter to climb up, but your RSI remains relatively below 60. It did break above slightly, but it's staying below 60. So there's still the bearish outlook is still valid. And if the market here breaks below 61.8% here at 1.2670, then we may have confirmed the continuation, the bearish continuation. And daily, one more look at the daily, we see that yesterday we had this engulfing pattern, bearish engulfing pattern. And today, if the market doesn't break above that 61.8%, so as long as the market stays below 1.2740, actually it's already broken 61.8, but if I am going to show the 78.6%, that is your threshold, 1.2745 area. If the market breaks that, then you can forget about the bearish outlook for the intermediate term. The euro yen continues to be bearish after hitting a 9-year low last week. And here you saw this correction rally up to 109.40 area, and the RSI stays below 60 as it did here and throughout the bearish mode. It came below 30, fails to break above 60 and sustain it, so it's very bearish, especially if this RSI here can come below 40, which should be confirming this decline, this downswing here towards 104. So this is about the 104 area, using this swing projection, especially this will be confirmed especially if the RSI here breaks below 40. Okay, and also you had this correction overnight in the European session, which failed to break above this 50 moving average, and we may see now a slingshot towards 104. So the US dollar Japanese yen continues its decline after a Gartley retracement, and it is continuing. Basically, this is also following this negative reversal. So if you remember, our target was at 79, 75, 80 level. For now, our target could be the 83 level in the short term, or 83.10 area. Okay. The euro Swiss franc pair has been in sort of a perma bear since the recession, and that is because the eurozone has a lot of debt issues, while the Swiss franc is a safe haven destination, and the Swiss economy is faring a lot better. So here the euro Swiss franc dropped to an all-time low, and is here is some targets for this continuation. From this rally, we have an expanded or extended retracement down towards the 200% level would be 122.14 area. We may see some resistance here at 1.20, support here at 1.25. Okay, so that's sort of the target. Here's another method, a measured move swing projection again towards 1.25. So that's the projected target in the short term. We may see some support there. This Swiss franc has also been outperforming the US dollar since June here. The market has declined, brought our moving average to crossover in August. And if you just look back, I'm going to switch to the weekly. We are nearing a rising support line near just above the parity level. And basically this parity level is going to be important. We should see some support here as the RSI also tests our bullish range, and now it's breaking below that, so it's showing us some bearish implications. However, in this weekly time frame, the RSI is not completely bullish yet. Here we have, not completely bearish yet. You had this bullish, I guess, breakout, and here we don't have a bearish breakout, so we are still slightly bullish in this overall mode since 2008. So look for some support just above parity level and see what kind of rally could result from that. If the market breaks below parity though, we could see it come down to 0.97. So during this risk-averse environment, the Japanese yen, Swiss franc, US dollar have been gaining. Now comparing those three, we saw US dollar, Japanese yen, and we saw Japanese yen gaining against the dollar. We saw the Swiss franc also gain against the dollar, and now we're comparing the Swiss franc with the Japanese yen, and we see that for the most part, these two have been ranging and broke below. Here we have a rally, and again market has been ranging, slightly bearish, but this is a correction mode. And now zooming back in, we are in the second swing of a recent upswing, or this could be it could end up basically establishing a sideways channel. Okay, so but in any case there's some resistance just above here, and we see that yesterday we had an engulfing pattern, and today we have a strong correction. So we don't have a follow through with this engulfing pattern as a bearish candle would be a follow through. Instead we have a pullback. So let's examine this pullback. We're looking at the 1 hour time frame. So we had this decline, and then now we have basically a double bottom and a pullback. So with this double bottom, conventional swing projection brings us back up to this top, and that could, we could develop that. Another scenario is, let's go down here, that we had this swing, and now we have a swing. This is a correction, which could be measured as such. You had your first A swing, and then B swing, and then C swing. Should be about 161.8%, and that fits this ratio analysis. So it makes sense that right now, right here at 83.20, we should see resistance, and we do have another engulfing pattern here, so we may be starting this decline, and we will be able to confirm that if the market breaks below 82.50, and preferably below this 200 moving average, which it has yet to break and confirm. So that's going to be an important thing to watch for in the 1 hour time frame. Break below this 82.50. Also, your RSI should break below 40. In any case, that should bring the market lower. And in the daily, we see that the market should come down to around the 80.50 area, which is these previous lows. Okay. And that wraps it up for today. There's no video tomorrow, but please join me for a live analysis session. Simply register your email for free at www.fxtimes.com, and I'll send you an invitation tomorrow before the Charters Corner session starts at 3 p.m. Eastern. Thanks again for watching, and good trading.